So a few weeks ago, Aphria released their quarter 4 of fiscal 2017 financial results, and this was what we got over here. Now, originally I looked at these numbers and I wanted to go look at them in much more detail, but I started looking into them and then something happened and I eventually forgot. And today, Aphria released their quarter 4 of fiscal 2017 investor deck. They updated their investor deck, and I remember that I never actually looked at the quarter 4 numbers. So I went onto their website, went onto their financial information, which is what I usually do for most companies. Looked at their quarterly results, or quarterly report, and quarter 4 is not here. So they lumped the quarter 4 results into their entire fiscal year. Okay, fair enough. We go back, we look at the annual report, and we want 2017, but 2017 is not available here. So somebody at Aphria is not doing their job because their financial information, which is pretty important, is not up to date. So you can find the quarter 4, well, not quarter 4, but the fiscal 2017 financial results. They are on SADAR. You can go get them there, but they're not on their website. So this is unprofessional because it is a $900 million company, and it's just annoying because generally you expect companies to keep their financial results up to date on their websites, and Aphria seems to have forgotten. Somebody just didn't update them. I don't know why, but it's not available here. So somebody needs to get on that because it's unprofessional, and generally you want your financial information to be available on your website. And you want it to be up to date, which is important. Anyways, so these are the numbers. So they had $5.7 million for quarter 4 of 2017, $5.7 million of revenue. But they had $5.8 million of a gross margin. And, well, at first glance that makes no sense, so you have to go back and look at this, and they had a change in biological assets of about $1 million, $923,000 to be more precise. So it looks like somebody underestimated the value of biological assets at some point, and they fixed it here, but this resulted in all of their numbers being a little bit weird, including some of the other ones. So cost of goods sold, for example, last quarter, quarter 3 of 2017, cost of goods sold for Aphria was $1.3 million. This year this quarter it's $500,000, so it's significantly lower, and it's probably not exactly what happened. The change in biological assets is screwing something up. I don't know exactly what it is or how to actually get the proper numbers, but it's like that. It's not particularly important because this sort of stuff will happen in the beginning. But this does mean that I can't really graph these numbers and that I can't do anything specific with these numbers. If I graph these numbers or use them in any sort of way, it's going to give you a graph that is not particularly representative of anything. So can't do much of these numbers. Now, Aphria did lose $5.5 million in long-term investments. The majority of these losses come from Cell and Conabo Medical Inc. And they sold this company at about, well, they sold it for about a $4.5 million loss, and this company fell to about 40 cents, and it's been there ever since. So that's that. I don't know why they sold this company stock, but I assume they had a good reason, so that's that. They currently have about $169 million in working capital, which is pretty good, and they have $167 million in cash and near cash positions. So their future expansions are pretty much fully funded, and there's not going to be any major dilutions anytime soon, which is good. We don't want these companies to dilute their stock anymore because it's already been diluted fairly heavily, especially at the beginning of 2017. So if we look at this, they sold 738 kilograms worth of inventory, and they got $5.7 million worth of revenue, and they had some really good margins. So Aphria's cost per gram are going down, which is good because as they are expanding, their cost per gram should be going down. And they seem to have some of the lowest, if not the lowest, cost per gram in the industry because they constantly are very open about it. And the only reason why you're open about something like this is because you're confident that it's the lowest in the industry. And it should be even lower as they expand even more, which is great. And they have really good margins, so that's nice. So if we take a look at 738 kilograms sold and $5.7 million worth of revenue, if we extrapolate that data a little bit, by July of 2018, they're going to be having 100,000 kilograms worth of growing space. And I don't know if this is per year or per quarter. I'm pretty sure this is per year, but 100,000 kilograms per year. If that actually happens, and we extrapolate this data, that translates to about $500 million worth of revenue. And if they have $500 million worth of revenue, then all of a sudden, I mean, general and administrative expenses should be relatively lower than they are currently now, and selling, marketing, and promotional expenses are also going to be significantly lower than they are now. I'm not saying that they're actually going to be lower than this. They're going to be lower in terms of ratios. So right now they got $5.7 million worth of revenue and they have $1 million in expenses. So it's about a 1-to-5 ratio between general and administrative expenses and revenue. Once their revenue goes up fairly significantly, their general and administrative expenses are going to be smaller in terms of the whole revenue, the pie of the revenue, the slice of the pie, whatever the metaphor is, I don't remember. But you get the point. So if they're going to be getting like $500 million worth of revenue, which is, I think that's realistic, right? It might be a little bit less because at those sort of volumes, the prices are probably going to be less. They might be doing a lot more wholesale, so they might get 400,000 or $400 million worth of revenue, but still, they're going to be getting a lot of revenue. And they should be in a very good position to make a lot of money because in addition to being ready to expand and already expanding at a fairly decent pace, they have, as I mentioned, low cost per gram. So everything is good. So for the entire year, they had $20 million worth of revenue, and that translates to $4.1 million, $4.2 million worth of net income, which is pretty good. 4.3 million of that income did come from long-term investments, or just consulting revenue and all of that sort of stuff. And then gain in long-term investments, they had 3.5 million worth of revenue, worth of profit on it actually, and that's good because they lost $5.5 million in the previous quarter, quarter 4, but they still came out on top with $3.5 million worth of revenue total for the year. So that's good. Not exactly too much to say here. I mean, $20 million in revenue. They made $4 million. Pretty good. They're not losing money at the very least, so that's nice. They're in a very good position to expand, and this company should be looking quite well for July of 2018, which is when Canada should be legalizing recreational marijuana. And this company should be in a very good position to make a lot of money. So that's that. Well, that's pretty much all that I wanted to talk about. I can't do a lot with these numbers, so let me know if this is helpful. Let me know if I should do more of these or if I should keep them to a minimum. I don't know exactly how helpful it is whenever I go over just basic numbers, what the company did and stuff like that, but some people might find it helpful, so I'll keep doing some of them. If a lot of people want me to, then I'll do more, but I'll probably just keep it to a minimum for now because there's not really particularly a lot to look at for a lot of these companies. They're not really doing much. Well, they are doing a lot, but in terms of actual numbers, there's not a lot that I can do in terms of graphing them, analyzing them in any sort of ways, because like, how do you analyze this? 5.7 worth of revenue, 5.8 of a gross margin. You can't analyze this. You just have to wait until the company expands a little bit more to see what the actual numbers are. So I don't know. Anyways, hope this helped. If it did, leave a like, and that's it.